the 5-minute opening range and how to adapt to it. The 5-minute opening range is formed by the first candle of the day. As long as price is trapped between the high and low of the first 5-minute candle, even your most trusted setup or strategy might have trouble with succeeding. A pre-market session, which neither rose over nor fell below the previous day's highs and lows, is a good sign to predict that this range will be held for quite a while after the opening. When we see this in the pre-market, we like to speak of an inside day. There are days where this barely is a factor. Market opens, price just shoots up and won't even come close to where the first 5-minute candle was. But today, the opening range didn't break for half an hour after the opening bell. The image you are seeing on the screen shows the entire duration of this opening range for not just a tiny no-name stock. This is SPY, or the S&P 500. The smart money, aka the people who run the stock market, always keep an eye on what SPY does. And you should too. Additionally to having a direct influence on all stocks that are included in this ETF, it also serves as an inspiration for many others. Higher price stocks, which are established for longer, will rather follow the direction of SPY, while lower price stocks tend to do the opposite. Of course, this is not a 100% reflection, and it won't happen every time. But having the SPY chart open next to the stocks you are watching can never be a wrong choice. But let's get a better picture of what happened today by also pulling up another ETF, which follows SPY closely. On the left side, you can see QQQ and SPY on the right, with the 2-minute time frame on top and the 5-minute time frame below. In our community, we like to use the 2-minute time frame to find quick entries at the start of the day. But if you have been paying attention, you might have already guessed that this didn't work out so well. By the time price started to crash below the opening range, it was already time to switch to the 5-minute time frame, and only then we were able to find setups that delivered the required follow-through. As you can see on the 5-minute time frames, after this initial drop, price still got pulled back up inside this range, so we only got a few scalps. But when we pull up the full chart for the entire day, you'll see that price got rejected there, and the real flush began. This was the moment we have been waiting for almost an hour, and our short positions finally gave us way more movement. It is important to note that we neither traded QQQ nor SPY, but our winners happened at the same time as this flush. This is a textbook example of how the opening range and inside days work, and that's why we felt that this lesson needed to be shared. So, what is the lesson to take away from this video? Always check the pre-market when you plan on trading during the opening. Know before the bell rings if market gapped up, gapped down, or if we have an inside day. Keep a look at market leaders such as SPY, in addition to all stocks on your watch list, and have the discipline to sit on your hands till the 5-minute opening range gets broken. If you really feel the need to place a trade inside this range, use only half of your usual risk. And if you do, always be prepared for a quick reversal as long as market leaders are still inside this range. If doing quick scalps is your style, you might even find gold where others just see an obstacle to overcome. Just keep in mind that ranging never lasts forever. Thank you so much for listening, and thank yourself for using this information.